Welcome to the Coin Bureau Weekly News Roundup. Here are the top stories in crypto this week. Crypto chop continues. Coins and tokens continue to trade sideways in the absence of any major macro or crypto factors. Why are Bitcoin and Ethereum's dominance declining? Spot ETH ETF. ARK Invest and VanEck file for 2 Spot Ethereum ETF applications after asset managers overload the SEC with applications for spot Bitcoin ETFs. When could these ETH products be approved? Obsessed with Solana, Visa announces USDC payments on the controversial Ethereum killer, as CoinShares finds Sol to be the most loved altcoin among institutions. What does this mean for Sol's price? China versus Apple. The world's second largest economy starts to ban products from the world's largest company amidst escalating geopolitical tensions. Everything you need to know. And a closer look at last week's top performing cryptos and where they could be headed next. All this and more in just a moment. Good morning, afternoon, or evening. Thank you for tuning in. My name is Jessica, and in case you didn't know, Guy is with the rest of the team in Singapore this week, so I am holding down the fort. We hope to be getting updates from him over the week. As always, everything in this video that follows is educational content, not financial advice. You can find any of the topics you're looking for using the timestamps in the video timeline. And now for today's top stories. Last week, the crypto markets continued to chop sideways, save for a few altcoins, which I'll come back to later. Now, this relative lack of volatility can give the false impression that nothing is going on in the crypto market. But as Decrypt recently reported, there seems to be something brewing beneath the surface. Now, this begs the question of what that something is. The answer ultimately depends on what indicator you're looking at. The one that caught my eye last week was the continued decline in both Ethereum and Bitcoin dominance, a decline which happened with a relatively steady market cap. There are only 2 things that could have caused this. The first could be that there has been an increase in the total stablecoin market cap. This doesn't seem to be it because the market cap of most stablecoins actually seems to be on the decline. This is likely due to the most recent round of crypto liquidations. This leaves only one other possibility, and that is that altcoins are gaining market share from BTC and ETH. In other words, we're in a mini alt season. This makes sense considering that we've seen no shortage of bullish headlines about altcoins lately, of which I'll come to in just a moment. Now, what's interesting here is that this apparent increase in altcoin dominance is similar to what we saw back in 2019. For context, it's generally believed that we're in the 2019 phase of the current crypto cycle. If this is the case, though, then the recent increase in altcoin dominance could be short-lived. That's because the closer we get to the Bitcoin halving, the more focus will turn away from altcoins and towards BTC. This would explain why most altcoins continue to look extremely weak compared to BTC, including ETH. Many of you will know this is something that Guy has been keeping track of lately. Many of you will also remember that altcoins being weak against BTC doesn't mean they can't pump in fiat terms. It just means that most of the capital that's coming into the crypto market is being directed to BTC and other large caps, something that's expected given the absence of retail interest. But as we've seen, all it takes to get retail investors interested again is an extremely bullish or bearish crypto catalyst. There has been no shortage of either recently. If you're subscribed to our newsletter, you'll know which catalyst could move the crypto markets this week. As is often the case, those catalysts seem to be lining up with BTC's recent price action, which is finally painting a clearer picture on the daily. As you can see, it appears that BTC is forming a head and shoulders there. For reference, a head and shoulders is a bearish chart pattern. Of course, one bearish indicator isn't enough to draw any concrete conclusions, but 2 certainly adds to the evidence. I'm referring to the death cross that BTC is slowly but surely forming on the daily. Some of you might recall that ETH had painted a death cross on its daily chart last week. This is more significant than you think because it seems that ETH has been leading the crypto market lately. If this is still the case, then BTC could paint its own death cross in the coming days. The caveat is that ETH didn't crash after its death cross. It's possible that BTC won't crash after its death cross either. Then again, maybe the missing ingredient is time. We'll find out soon enough. Speaking of ETH, one of the main reasons why the death cross didn't take its price down could be because of all the bullish news that came out last week. For starters, asset managers ARK Invest and VanEck filed for the first 2 spot Ethereum ETFs with the SEC. This is significant for 3 reasons. First, it's believed that other asset managers will follow suit now that these 2 titans have thrown down the gauntlet. You'll recall that this is exactly what happened with BlackRock's spot Bitcoin ETF application. All the other asset managers jumped on the bandwagon. This ties into the second reason why these filings are significant, and that is that the recent spot Bitcoin ETF filings theoretically increase the chances that a spot Ethereum ETF will be approved. The fact that ARK and VanEck went into all the effort of filing suggests they believe this is a real possibility. The third reason why these filings are significant is a caveat of sorts, because the SEC still hasn't approved an Ethereum futures ETF. Now, there have been rumours that this approval could happen in autumn, but it seems that the SEC would approve a futures Ethereum ETF before a spot ETF, just as they did with Bitcoin. The timeline of all of these ETF filings looks fascinating though. A Bitcoin futures ETF in late 2021, potentially an Ethereum futures ETF later this year, followed by a possible spot Bitcoin ETF early next year. A spot Ethereum ETF would likely come sometime after that, but it's hard to say how long the wait would be. Now, I'd be remiss if I didn't mention a couple of other Ethereum headlines that seem to have been overshadowed by all of the ETF chatter. Earlier last week, Ethereum's creator Vitalik Buterin proposed making it easier for users to run Ethereum nodes to increase the blockchain's decentralization. For those unfamiliar, almost 60% of Ethereum nodes are currently being hosted on Amazon Web Services, or AWS, a centralized computing cloud. If you've watched our video about crypto decentralization, you'll know that centralization at the node level is an issue even among major crypto projects. Vitalik's solution would involve so-called stateless nodes, which would make it possible for anyone to verify the validity of the blockchain without having to store it in its full transaction history. If that sounds futuristic, that's because it is. Vitalik doesn't think this solution will be possible anytime soon. However, there is another innovation that Vitalik has been working on which could find its way into Ethereum soon, and that is privacy pools. As the name suggests, privacy pools make it possible to preserve privacy on Ethereum, much like Tornado Cash, but with one key difference. Privacy pools will make it possible to mix cryptos that only come from honest users. Malicious users who try to mix their crypto with privacy pools will have a hard time. This contrasts with Tornado Cash, which allows anyone to mix their crypto, including North Korean hackers. The result was Tornado Cash being sanctioned in the US. Obviously, this promising technology simultaneously raises lots of concerns, such as who decides who counts as an honest user. Setting these limitations could turn into a slippery slope, wherein, say, any user who hasn't connected their crypto wallet to a government-issued digital ID is automatically malicious. Even so, it's a step in the right direction, and it relates to the predictions that we've been making about privacy in recent months. We predicted that crypto projects would start to implement privacy solutions due to demand by institutions and wealthy individuals. This prediction seems to be coming true. That said, Ethereum's recent updates could just as easily be reflective of the intense competition that we're seeing in the Layer 1 landscape. Solana was once believed to be one of Ethereum's top competitors. The keyword there is was. After the collapse of FTX and Alameda, Solana seems to have fallen off the radar. If you watched our video about the impact of FTX and Alameda on Solana, you'll know that both companies held around 15% of Sol's total supply. This Sol was now at risk of being liquidated as part of the bankruptcy proceedings. and that could suppress Sol's price action, to put it mildly. And yet, Solana seems to have held up quite well given the circumstances. Earlier this year, it launched its crypto phone dubbed Saga, and it finally launched its EVM-compatible layer called Neon. Sol's price action has also held up quite well, despite it being labelled as a security by the SEC during this time. If you watched last week's crypto review, you'll also recall that MakerDAO, one of the biggest DeFi protocols on Ethereum, was considering starting its own Solana-based blockchain. To clarify, it wasn't planning on migrating to Solana, just forking its code. Still, it underscores the appeal of Solana's tech. On the same day we were pushed that crypto review, CoinShares revealed that Sol is, and I quote, the most loved altcoin among investors. This is because investors haven't withdrawn nearly as much from Solana-based funds as they have from other altcoin funds. In fact, Solana's funds have seen net inflows year to date. Then, just one day later, it was reported that Visa would be testing USDC payments on Solana. To put things into perspective, one of the major selling points of Solana is that it could become a robust payment network. This selling point seemed dead after FTX, but it has been resurrected in a big way. As a cherry on top, the team behind Lido Finance, Ethereum's largest DeFi protocol, requested funding to expand the protocol's support for Solana. This is strange considering that stake Sol is only locked for a few days, but nonetheless, it highlights the fact that there is a demand for Sol these days. It's also a warning for Ethereum, which has been trying to position itself as the ideal crypto blockchain for payments. As Visa is finding out, however, ETH fees can add up, and even if these fees can be abstracted in any way with the help of smart accounts, people aren't keen to pay the premium. There is just one bear in this bullish story, and that's the number of active wallets on Solana has reportedly been on the decline. Not only that, but stablecoins aren't exactly in the clear from a regulatory perspective. It's hard to see mass adoption scenarios against this backdrop. But that doesn't mean that Solana won't see mass adoption in the future, as we've been saying for months now. So long as Solana can survive the bear market, then there's a high chance that we'll see some big gains during the bull market. That's simply because it's one of the most speculative pays. Once upon a time, cryptos that promised to be better than Bitcoin were speculative plays. Then it was cryptos that promised to be better than Ethereum. The last few layer ones seem to have promised to be better than Solana, namely Aptos and Sui. In a weird way, this could be a bullish sign for all three coins. Moving on, the US-China geopolitical tensions appear to be getting worse. The origin of these tensions is admittedly complex, but the key takeaways is that they serve purpose both domestically and internationally. Take China's recent move to ban iPhones, for example. At the time of shooting, China has banned various government employees, state officials, and even some government-backed firms from using iPhones. FYI, if you're a large firm in China, chances are you're government-backed. There's no doubt that this is a big deal, and it's a deal that's getting bigger by the day. From an international perspective, this looks like China retaliating against the United States for the latter's continued sanctions against the Chinese mainland, particularly around AI chip exports. It could also be China trying to prevent any potential US surveillance of key officials and operations. From a domestic perspective, however, this could be China's way of forcing its top officials to buy Chinese phones, something that they've desperately needed given the state of the Chinese economy. It's also a way of ensuring that more CCP domestic surveillance of key officials and operations. Chances are that both explanations are partially correct, but it's arguably irrelevant. That's because it's having the practical effect of crashing Apple's stock price and creating uncertainty among other US tech companies that's having lots of exposure to China, which is basically all of them. As I mentioned in the introduction, Apple is currently the world's largest company by market cap. This makes it the Bitcoin of the stock world. Bitcoin has a profound impact on the crypto market. The same is true for Apple, albeit to a lesser extent. When tech stocks are supporting the stock market, though, it matters. At this point in the apparent conflict, though, the ball is in the US's court. If US retaliates by imposing some more sanctions on China, then China will respond in kind. This has been happening for months, and it only seems to be getting worse. The scariest part is that Apple can see the writing on the wall. As you might have heard, Apple has been trying to migrate manufacturing out of China and into India, which just so happens to be an ally of the US. This is analogous to countries around the world making their own microchip facilities. It's a tacit admission that tensions with China will continue to increase. The assumption is that these tensions could escalate to an actual war, but an economic war would be devastating for everyone involved. At the end of the day, China needs US dollars, and the US needs things that China is producing. It's a mutually assured economic destruction, so to speak. Then again, maybe it just boils down to the question of which country can endure more economic pain. From the outside looking in, it looks like China can withstand more social unrest than the United States. From the inside looking out, though, China already seems to be at the brink of another revolution. Geopolitics aside, last week's top performing cryptos were Stellar, Render Network, Synthetics, Rocket Pool, and Asta Network. Starting with Stellar, its XLM coin appears to have pumped in response to the speculation that the crypto project is about to make a big announcement related to the tokenization of real-world assets. The Stellar Foundation has been teasing about this announcement on X and will be made tomorrow. XLM's price action is still looking strong in the short to medium term, but it seems to be struggling to get above the key price level of around 14 cents. Depending on what tomorrow's announcement is, it could be a sell the news event, or it could be a bullish catalyst that pushes XLM through this 14-cent resistance level. Next up, we have Render Network, whose RNDR token pumped for unknown reasons. Our best guess, though, is that it's related to the use case that the crypto project has been showcasing on its X profile in recent weeks. In contrast to XLM, RNDR is looking weak in the short to medium term. That's because it's far below the Bollinger Band moving average on the weekly. The silver lining is that this recent rally could be a sign that a big announcement is coming, and insiders are positioning themselves accordingly. As for Synthetics, its SNX token appears to have pumped in response to the news that the derivatives DEX has approved 19 additional markets for trading. Now, it's worth noting that DEXs have been doing quite well these days, probably because there have been serious concerns about centralized exchanges. In any case, like RNDR, SNX is looking quite weak on the daily and the weekly. On the daily, it seems to be on the brink of breaking below the Bollinger Band moving average, whereas on the weekly, it was recently rejected on the Bollinger Band. Hopefully, a bullish catalyst will come around. Regarding Rocket Pool, its RPL token appears to have pumped in response to the news that it's made possible to transfer its wrapped stake ETH tokens to Coinbase's new Layer 2 for Ethereum. Be sure to check out our video about Base if you haven't already. The link will be in the description. Now, in terms of price action, RPL is pretty rough. As you can see, it's been crashing for months, and its price continues to squeeze to the downside. It's seen a few rallies in between, which were probably driven by short squeezes. The chances are this is what caused the big rally in RPL last week. Finally, we have Asta Network, whose ASTR coin appears to have pumped in response to the news that a project plans to make a big announcement at the Token 2049 conference in Singapore. As I mentioned, Guy and a few of the other members of the team will be there. Be sure to say hi if you see them. Now, as far as price action goes, ASTR is looking neutral. On the weekly chart, it's sitting just above the Bollinger Band moving average and seems to be squeezing. This means that it could see a sharp move on the upside or the downside. Something tells me the upcoming announcement will be the catalyst. And if you want to know why cryptos are pumping in real time, be sure to join the Coin Bureau Insider Telegram channel. The link will be in the description. Well, that's all for today's Coin Bureau Weekly Crypto Review. If you enjoyed it, then you know what to do. Hit that like button, subscribe button, and the bell icon too. Don't forget to check out our deals page where we have massive discounts and airdrop bonuses of up to $40,000 on some of the best exchanges, only for the viewers of this channel. You can find the link to that resource and many more in the description below. Thank you so much for watching, and I'll see you in next week's episode.